Ladies and gentlemen, good day and welcome to Q4 FY22 conference call of Goldiam International Limited. As a reminder, all participants' line will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your telephone keypad. I now hand over the conference over to Mr. Rahul Jaju from Dickinson World Private Limited. Thank you, and over to you, Mr. Jaju.
Yeah. Good evening, everyone. A very warm welcome to everyone present here for the Quarter 4 and Financial Year 2022 Goldiam International Limited. I would like to remind you that today's remarks might include forward-looking statements and actual results may differ materially from those contemplated by forward-looking statements. Any statements we make on this call today are based on our assumptions as on date, and we have no obligation to update these statements as a result of new information or future events. Today we have with us the management of Goldiam International, represented by Mr. Rashesh Bhanshali, Executive Chairman, and Mr. Anmol Bhansali, Whole-Time Director. I would now like to invite Mr. Rashesh Bhansali to make his opening remarks. Over to you, sir.
Thank you, Rahul. Good evening, everybody. We welcome and thank you all for taking your time out this evening to have a brief interaction with us. I hope you all had a chance to browse our investor presentation uploaded on our website and exchanges. The financial year 2022 was a landmark year for Goldiam as it surpassed the key PAT milestone of 100 crore rupees. We had set this ambitious target in FY2019, aiming to double our profits in 3 years. We are delighted to inform you that we have delivered on this goal. Looking at the performance for the year under review, I am happy to report that we significantly outperformed our sector with profitable growth. This reflects the skillful execution of our product and sales strategy, rigorous financial discipline, and a shared culture emphasizing responsibly and the commitment to both our customers and shareholders. Additionally, the company is in process of deploying a capex of rupees 100 million for enhancing the company's in-house lab-grown diamond capacity. The added capacity will be available for commercial production from Q1 FY23. We are also evaluating a roadmap further to double this capacity in the coming 2 years to meet our aspiration of becoming a significant producer and grower of lab-grown diamonds. The company's order book remains robust at more than 150 crores, which is expected to be executed within the next few months. This gives us strong visibility of the near-term expectations of the company. Goldiam follows an ROE-driven business model. For its natural diamond jewelry business, the company offers mainly small carat-based products. Still, with an exclusive design-based model, we can garner better realizations and higher margins. The company maintains limited SKUs with exclusive designs and does business with the world's best retailers that have been affiliated with Goldiam for a long time, vouching for all repeat orders. Moving on to lab-grown diamond to grow, manufacture and distribute lab-grown diamonds and jewelry. With our subsidiary Eco-Friendly Diamonds LLP, the company has been going from strength to strength, both in terms of scalability and product. Currently, lab-grown diamond jewelry constitutes of 20% of overall revenue and is nowadays witnessing strong growth momentum. Goldiam has become focusing on large carat-based diamonds, which yields better realization and in turn higher margins as well, therefore mirroring a strategy of following ROE-based model businesses. Along with a focus on larger carat-based diamonds, the company has focused on integrating these diamonds into its jewelry distribution network. Therefore, by securing captive consumption in a rapidly growing segment of the industry, the average ASP of lab-grown diamond jewelry stands substantially at a premium of 120% over mined diamond jewelry of the company. Along with the appeal, the online business is also quite ROE lucrative. It enables the company to have further and better inventory turns and reduce debtor days. Thus, in turn, affords us to have a shorter working capital cycle, in fact, negative working capital to be more precise. Our overall ROE for financial year 2022 stands at 22%, while FY21 was at 15%, from 6% in FY2018. while our ROC has improved from 10.6% in FY 2018 to 60% in FY 2022. Coming to our balance sheet, we are proud to inform you that Goldiam enjoys a net debt-free status. In fact, the company has 200 crores of cash and cash equivalents as on date. With that, we shall be happy to take questions. Hello.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star 1 on your touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, I would request you to press star 1 to ask a question on your telephone keypad. The first question comes from the line of Dixit Doshi with Whitestone Financial Advisor Private Limited. Thank you. Please go ahead.
Yeah, thanks for the opportunity. So 2-3 questions. Firstly, congratulations for a great performance this year. Now, with this kind of growth, our base has gone up. So what kind of growth you are looking in FY23 and beyond? Also considering the fact that the inflation in the US is going substantially high. So how you are seeing the retail market demand there?
Thank you, Dixit. This is Rashesh Bansali. Thank you for encouraging us with your warm comments on our growth. Then for the existing current year, we believe that the inflation in America may cause some type of a concern for middle class people over there to buy jewelry, but nevertheless, the company fights that with lab-grown diamond jewelry. Lab-grown diamond jewelry is retailed essentially because of its costing cheaper than natural and mined diamond jewelry. So we believe that there will be good and sound business for the company. And since we've come out from a year of huge growth, we're looking for a year of consolidation to a modest 5 to 10% growth for the existing year.
Okay. And if I see the Q4 performance, I think the gross margin has come down slightly, even though our profitability has improved due to the other efficiencies. So how do you see gross margin behaving?
So we actually don't have too much of a concern on our margins because Goldiam as a company runs after margin-oriented businesses. So I don't think our margin will suffer in the existing year as well.
Okay. And one last question. In one of our earlier interaction, maybe 2-3 years back, you have mentioned that in lab grown the power cost is very important, and you were looking at expansion somewhere where the power cost is low. So any update over there?
Sure. So right now, what is important for you to note is that FIPS itself in Maharashtra, right? They have reduced our power cost from 12 rupees a unit, 12 and 13 rupees a unit to 9 rupees a unit already. Now, coming September, we are hopeful that with the new interactions we have done with the Power Ministry and the government, we are expecting the 9 rupees to go down to 7 rupees. So, if that is all happening right now, then I don't think there's really need for us to go anywhere else.
Okay. Okay. Thanks. That's it from my side.
Thank you. Anyone who wishes to ask a question, please press star 1 on your telephone keypad. The next question comes from the line of Aman Vij with Astute Investment Management. Please go ahead.
Yeah, good afternoon, sir. My first question is on the lab-grown diamond. So we are undertaking a 10 crore capex, which will be commercialized in, I think, May itself. So what are our utilization target for this year of the new capex, as well as you have also talked about a bigger capex after this 10 crore capex. So if you can briefly talk about that plans as well.
Sure. I will ask Anmol to answer the first part of the question, and then I will answer your second part. Anmol, are you there?
Yeah, sure. Thanks, Aman, for your question. So the 10 crore capex addition will yield about 35 to 40% additional capacity for our lab-grown growing unit, and we expect to be at full capacity from the very beginning, capacity utilization. So this is actually in advance of orders that we have already received for the company. So, we are not expecting to, do this capex and undertake this capex without confirmed offtake from our customers. So we're very happy and pleased that the additional machinery that we are setting up, all the product that comes out of it is already pretty much spoken for, or, we have orders to utilize that additional capacity as well. For the second part of the question, I'll refer it back to our chairman.
Hi. Aman, so the second part of the question is how much is the further capex that the company plans to do? So the company definitely plans to invest in such businesses which is profitable for us, and we are looking for an additional of between 10 crore to 35 to 40 crores of capex within the next 12 months to increase our own diamond growing capabilities.
Sure, sir. One final question on lab-grown diamond, and then I'll come for other questions. So, as a mix, it is 20% currently. So, what do you think this number will be for FY23 and say 3 years hence? What can be the contribution of lab-grown diamond?
So we're actually expecting lab-grown diamonds to grow very strongly. So I can say that in FY23 we may look at it as 25% of the overall business, and within 3 years we expect it to be more than 50% of Goldiam's business.
Sure, sir. That helps. On the customer side, if you can talk about what is the latest number of large customers who are taking our lab-grown diamonds in the US, and what is our target? Where do we see this number of customers in the next 1 year?
So you must understand that the number of customers is that Goldiam sells to the larger retailers out there, and we have just got impaneled with the world's largest retailer for lab-grown diamond jewelry. So we're currently selling to 5 very large customers for lab-grown. We just got impaneled with the world's largest last week. So we truly are expecting these numbers to grow because all of these customers have the capability to buy from $5 million to $50 million of jewelry of lab-grown from us individually.
Sure, sir. That is very good to hear. Finally, if you can talk about our website, Jewel Fleet, and also we have taken other measures of appointing someone to help us reach more players. If you can update us on the same.
Sure. So Jewel Fleet has been a nascent operation for us where work has started. Business is a little slow on our own website because of marketing, but we've appointed one middleman and a wholesaler who's already started working on this, and work has started on it. We will be able to update you more about Jewel Fleet in the next few quarters.
Sure. Final question, sir. Have you seen any increased competition on lab-grown diamonds? We were hearing 1-2 more players thinking of coming. Have you seen any increased competition in lab-grown diamonds, either from India players or international players? If you can talk about
I think in lab-grown diamond, the increased competition, if any, is coming only from Indian players, right? Because there are a few people in regional cities like Surat and Ahmedabad which probably grow these lab-grown diamonds. But again, you must understand they sell loose diamonds. We are the only ones who actually grow diamonds, cut it, make jewelry out of it, and send it to retailers ourselves. So we have in a much better situation.
And any other big listed players or unlisted players who have talked about their lab-grown diamond plans, and you have seen them on ground?
There might be another listed player who manufactures who buys and trades in lab-grown diamonds, but there is no other listed grower in the lab-grown diamond. Goldiam is the only listed grower in our country and probably the only listed company in the world which grows, cuts the diamonds and makes jewelry with a full 100% backward integration.
Sure, sir. That is it from my side. Thank you.
Welcome.
Thank you. The next question comes from the line of Akash Zaveri with Perpetual Investment Advisor. Please go ahead.
Thank you so much for the opportunity and congratulations on a good set of numbers. Just one question. In your opening comments, you mentioned that lab-grown diamonds was 20% in the year. If you could just tell me in Q4, what was the contribution from lab-grown diamonds, and also what is the contribution from our e-commerce business in the quarter as well as the year?
So let me answer that. In Q4, the contribution of lab-grown diamonds was slightly lower than Q3 because Q3 is the biggest quarter of our company. That is the time when all Christmas orders and Thanksgiving orders are off-taken. So Q4 clearly had a lower contribution from lab-grown diamonds. Though the growing capabilities of the company, we grew enough and they're all being used for the orders that will be delivered right now and in the next quarter.
Okay. And on the e-commerce front, what would be the breakup for the quarter, the percentage for the quarter as well as the year?
Of Q4?
Yeah, like the e-commerce business as a whole, like a .com business, what percentage for the quarter and what percentage for the year?
That has been maintained at 15%.
15%. And how has the lab-grown diamond evolution been over the last couple of years, and how do we expect it to move ahead?
Anmol, do you want to take this?
Sure. So, lab-grown diamonds has been, very steadily increasing in the U.S. market. We've been very excited to see the sort of growth among retailers. Within Goldiam's distribution itself, not only have we introduced lab-grown with certain retailers, but also helped them to expand their offerings very dramatically across categories of type. As mentioned by our chairman just a few minutes ago, we're very excited. Only in the last week or so, we've recently been appointed or empaneled to sell lab-grown diamonds into the world's largest retailer also within which is located in the US. So that potentially is a sizable market. We basically see different retailers playing their strategy as to how they want to introduce lab-grown diamonds. It's definitely, without a doubt, in the US become a category that every retailer needs to have at varying degrees of scale. And Goldiam is striving to be the number one vendor or the number one supplier that can provide an end-to-end integrated solution for these retailers within this high growth area of lab-grown diamonds. Whether it's smaller diamond jewelry, large diamond jewelry, and all of it, doubly added onto their websites and e-commerce, we want to place ourselves as the go-to vendor for lab-created diamonds. So this is the way we're seeing it playing out, and we're excited to be in the right place within the market right now.
Got it. Thank you so much for that. Just a follow-up question with what Mr. Bansali said, that if lab-grown diamonds can be 50% of our business in the next 3 years, then would our EBITDA margins also permanently move close to 25-30%?
If lab-grown diamonds become 50% of our business, EBITDAs will definitely move close to 25%.
Absolutely. Yeah.
Okay, thank you so much. And also, just a question about the recent free trade agreements that have been signed by, with Australia and the UK. Do we see any form of gain coming from that, or any new business that we can expect coming from these countries, or do we feel US is still our biggest and will stay our only market?
I think US is our biggest, and we hope that we can do strides in Australia and UK as well. The company is trying and selling to a few major retailers out there. We just need to increase our designing capabilities, right, for those markets and the styling of designs to improve markets over there. So I guess everything will take its own time, but currently US is our largest market for sure.
Right. Just to add on, US is definitely our top priority, and I think the most similar market to US would be Australia. So we would be looking in the future to start selling in these markets as well.
Got it. Thank you so much. That is all from my side, and all the best for the year. Thank you so much.
Thank you.
Thank you. The next question comes from the line of Kush Gosrani with Incred Asset Management. Please go ahead.
Hi, thank you for the opportunity and congratulations on good set of numbers. I just wanted to understand in terms of gross margin reduction, is it because just the LGD came down, or is there something else as well which we have to read through?
So the gross margin reduction in the quarter is what you mean, in the last quarter?
Quarter and the full year as well.
No, the full year, the gross margins have been very good. We are working on a 22% EBITDA.
Okay. And for the quarter?
And for the quarter, also we are working on a 21, 22% EBITDA. But the whole situation for the quarter was that because of some supply chain constraints, the orders that we had received, we had to pay more for raw material to procure because of the Alrosa problem and the Russian sanctions, right? But now the company has bought enough raw material that for the next 2 to 3 months, the company has enough goods with them to house the orders. So I think this should not be repeating again.
Just to add on as well, we have successfully, as on date, passed on the increase in raw material to our customers as well. So raw material price increases have been passed on in finished prices to the customers as well.
Okay, so it was just a timing lag. And in terms of OCF, after working capital is negative 10 crores when compared to 50 crores last year. So what has happened on the working capital side? Is it only majorly inventory side?
Yeah, so clearly we are building inventory right now. Right, so we have the goods for the order, right? Because we didn't want to face any supply chain, and even for e-commerce, we are delivering 5 to 7 days of guaranteed delivery. So we have to buy the inventory and hold it. So that is the current reason why you may see that.
Sure. Okay. And the situation is easing out, right?
Yeah, it will ease out in time. Yes.
Okay. Sure. Thank you for the opportunity.
Thank you, Kush.
Thank you.
Thank you. The next question comes from the line of Alia with SR Financial Services. Please go ahead.
Hello. First of all, congratulations for the good numbers. My first question is how we are able to reduce our working capital days. Do we have any specific numbers we are targeting going ahead?
So 15% of our business is actually e-commerce, and that is working on a negative working capital. I think this helps dramatically in ensuring that our working capital days are reduced, and they will further reduce. We are also working with clients to ensure that we get goods and we get all our payments within 90 to 120 days, and some wholesalers pay us from 120 to 150 days. So we are working towards more efficiency on working capital and number of days.
Okay. Secondly, I want to understand, what are we targeting for next year in terms of, in front of profitability and revenue growth and capital allocation? So next year estimates for the profitability, revenue, and capital.
We are looking for a year of consolidation. Coming out from such a huge growth, we are, and with the inflation in America and all over the world, we're looking for a year of consolidation or a modest growth of 5 to 10%. We are also looking for a capex to make and have more lab-grown diamond machinery. So anywhere between tune of 10 to 35, 40 crores is something where the company is looking to invest in growing its lab-grown capability.
Okay. Thank you. That's it from my side. Thank you.
Thank you, Alia.
Thank you. The next question comes from the line of Sai Kumar, individual investor. Please go ahead.
Hello, sir. I'm Sai Kumar. I'm a retail investor. Can you all hear me?
Yes, we can hear you.
Okay. Sir, I have a small question. It's just due to a lack of knowledge. So what do you mean by backward integration, sir?
Anmol, can you answer this?
Sure. So by backward integration, we mean that we not only are producing jewelry, but we are also producing the lab-grown diamonds that go inside that jewelry. So we grow the diamond ourselves, cut it ourselves, use that into our jewelry, completely integrated operations, and distribute that to retailers in America. So right from the very start of growing diamonds till putting it in rings and distributing those jewelry pieces to US clientele, we are completely integrated in lab-grown diamonds.
So in another nutshell, Mr. Sai Kumar, that the entire value chain and the profitability in that value chain comes only to Goldiam because we do all the works connected with lab-grown diamonds from mine to market.
Okay. Okay, thank you, sir. Yes, all the very best, sir, and congratulations for the very good set of numbers.
Thank you.
That's it from me. Thank you.
Thank you. The next question comes from the line of Neha Sharma with Pearl Globe Investments. Please go ahead.
Hello. Am I audible?
Yes, Neha.
Yeah.
Good evening, sir, and congratulations on the good set of numbers. Just one question. As you mentioned that you are exploring D2C business in India. So can you throw some light on that strategy?
So Anmol, you want to take this?
Sure. So we are still in discussions and the management is evaluating opportunities. However, the idea is that basically we believe lab-grown diamonds is a strong industry tailwind that is here to stay. And like we've seen in the US, it is going to dramatically grow once the public understands what lab-grown diamonds are, how they differentiate, and more importantly, how they are the same as natural diamonds in many ways and forms. The cost advantages are significant, and we believe that in a country like India, it might end up being a strong segment of the overall jewelry industry. Goldiam has not historically sold in India before, and the market here is both very large and growing. There's increasing use of diamonds, not just plain gold jewelry, but an increasing move and shift as India's economy grows, and the average consumer preference for diamonds, for jewelry, moves towards diamond studded, and we think lab-grown diamonds will offer a very attractive product to the average Indian consumer as well. So, with these thoughts in mind, the management at Goldiam is thinking and evaluating opportunities. At the moment, there is nothing to share, but this is something that we believe we could look into investing in the upcoming year or so. Hello.
Thank you.
Hello.
Yes, you there?
Yeah, we're all here.
Well, yeah.
Thank you. The next question comes from the line of Ayush Agarwal with MAPL Value Investing Funds. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, Ayush.
Yes.
Congratulations on a good set of numbers, sir. My question is on the LGD side. So you mentioned that Goldiam is probably the only one who is doing end-to-end in this business in the listed space, right? So
right.
Where do you see competition from, in the value chain, or who would you call your competitor as? And I mean, are they from India? Who are these companies? Because we seem to be doing pretty well here. So I want to understand first that where is our competition based, and who are these competitors? Probably bigger than ours or smaller than ours.
Anmol, you want to take this?
Sure. So thank you, Ayush, for the question. So we are now pretty much very well integrated in lab-grown, where more than 85% of our growing is captive consumption within Goldiam for jewelry orders itself. So our competition really is similar size and like-minded wholesalers or jewelry distributors in America that have access to and continuously sell to large US retailers. That is who I would say today is our competition in the lab-grown space. So
can you name a few of them?
They're private companies, but among public companies. There is Renaissance Global and a bunch of private companies as well. But they basically are wholesalers and distributors of fine jewelry to the US retail market. Like we mentioned in the past, we differentiate by being in this arena of competition. We differentiate by being the only one that is growing CVD diamonds ourselves, lab-grown diamonds ourselves, and therefore we are able to offer a complete product suite to these retailers. Whether they want small diamond jewelry or large diamond jewelry, we are the only company that can offer the entire range.
Right. That's helpful. And my second question is related to this only. Sorry, were you saying something?
No. Please go on.
Oh, all right. So my second question is related to LGD only. Given that it's a high growth, high margin segment, and we are very well integrated, and I guess high margin is a result of that as well. But I just wanted to understand from you that what is protecting us in terms of margins and growth in the value chain. Is it that it's difficult to get the retailers? Is it difficult to manufacture LGD? Is the tech difficult? So what really is protecting us from high margins and high growth, and what will protect us going ahead?
Absolutely, great question. So there's two main points that protect our margins in the lab-grown space. Number one is the technology. Goldiam, at least eco-friendly diamonds, when it was started, spent about 2 years just in R&D trying to grow diamonds and trying to get the right formula on how to grow diamonds. So that itself takes time, and to do it consistently month on month in a commercialized way is also a difficult process on its own. So we are very happy that we've been able to not just crack the formula, but also consistently grow gem quality diamond rough month on month without fail. Within this space also, we have a license for 4 US patents in perpetuity that allows us to grow and very easily reach out to US retailers and sell to them. And that links to the second point, which is a key differentiator, is that by integrating into jewelry and selling into our distribution, the distribution allows us higher margin because effectively we take the margin throughout the entire supply chain. At every point from growing diamonds to cutting to making jewelry, by being integrated, we are able to enjoy that entire pipeline of margin versus a competitor who is only buying polished diamonds, making jewelry and selling it, who has a more constricted sort of margin profile to enjoy. So it's both technology and distribution capabilities that differentiate us and are going forward also maintain our margins.
That was really helpful. And just one small question to end with. What's the kind of capacity addition do you see in the LGD space, in the large carat, because I think that is where we are mostly present?
Absolutely. So just this May, we will be setting up the 10 crore capex will be going into operation, and that will be an additional 30 to 35% capacity. So we will be growing over. We will be growing over 650 polished carats every month. So that's the capacity we'll be at.
No, sir, I was talking about at the industry level.
At the industry level, I can't really quote any figures. There's no, readily available easy data with us. But
okay.
We can definitely see that the industry on the demand side is growing very well, and I'm sure various manufacturers are creating capacity as needed.
All right, no worries, sir. Thank you so much for your answers.
Thank you, Ayush.
Thank you. The next question comes from the line of Karthik Bhatt, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. My question was slightly qualitative in nature. I was reading up that there is a increase in acceptance and demand for lab-grown diamonds for occasions like engagement, wedding, and all. So how true is that? I mean, are you all seeing that behavior of increase in demand in the US market, number one? And if yes, as in that context, is this guidance of 5 to 10% slightly conservative in nature? That is one. And second is, you hinted at inorganic ways of growing during the last call. Is that on hold or any further color on that?
Anmol, you want to take it?
Sure. Yeah, I'll take the first part of the question regarding lab-grown diamonds. So, absolutely, Mr. Karthik. I think more than a very large percentage of our lab-grown jewelry sales actually go into the engagement and wedding category. So we are, rather than fashion, because we focus on large carat diamonds and growing large carat diamonds, by nature that comes into the more engagement and wedding category. One key metric that you could see is our average selling price for natural diamond jewelry from Goldiam is around $500. But within lab-grown diamonds, because we use much larger diamonds and much larger diamond sizes, the average selling price is over $1,000. So it's we are completely well placed within bridal engagement and wedding in the lab-grown space. Regarding your follow-up question, I'll ask the chairman to provide some remarks as well. If you could repeat it kindly, that would be great.
Yeah. Karthik, can you repeat the second question?
Yeah, so you hinted at inorganic ways of growing during the last call. Any further update or any further color on that? During the last call, you had alluded to maybe you are also open to opportunity.
We're still in talks and we're looking. We still haven't found the right fit for us to do a venture with somebody else for the time being. We're always on the lookout to find an inorganic way of growing and to get an acquisition which helps us in distribution. That's the most important thing for us.
I think just to add on as well, valuations coming off slightly as well, it will only bode positively moving forward.
Thank you.
Sure. Thank you.
The next question comes from the line of Akash Zaveri with Perpetual Investment Advisor. Please go ahead.
Yeah, hi. Thank you for the follow-up. Just another question that do we see green shoots of jewelry and lab-grown in particular manufacturing shifting to countries like India and Thailand versus China? And the second question to that would be, how do we compete against countries like Thailand, and which countries are our main competitors?
Sure. Should I take this?
Yeah, take it.
Right. So thanks for the question, Akash. Right. So Thailand, China are competitors in the jewelry manufacturing space globally alongside India. We are very well placed as a country for jewelry manufacturing because India is the diamond cutting hub of the world. 85 or 90% of diamonds that are mined around the world are cut in India, and within lab grown as well. Almost entire lab grown production of the world is cut and polished in India. So having that sort of backing right next to us allows jewelry manufacturing to be very positive as an industry within India. With regards to your question of movement of market share, I think these FTA agreements that have been signed, especially with Australia and the UK, two countries that do buy jewelry from China and Thailand, I think it will only bode very well for India for the Indian jewelry manufacturing industry, where we'll be able to, as an industry, take market share away from the other countries. I think moving forward, having that sort of ecosystem largely helping the industry will also end up boding well for Goldiam, where we'll be able to take advantage as we see opportunities available to us.
Got it. Thank you so much for that. Just another question was if you could explain how the order book, the evolution of the order book throughout the year. So the order book at the end of Q4 and, then the orders for the season starts coming in from which month, and then so can we expect a much higher order book, by the end of Q1 FY23, like significantly higher than the current one, or could you just throw some light on how the order book works?
Sure. Akash, so Goldiam works in a seasonality of business cycle. We are biggest, since America is the biggest customer, biggest market, right? And the biggest times where people sell in America is clearly Mother's Day, Thanksgiving, and Christmas Day, right? These are the times where the maximum retail sales are happening, or where the consumers are buying huge online and they're going to the stores and buying jewelry. So clearly effective, we are producing for these dates. And of course, we are in the engagement wedding business, so weddings also happen virtually every day. Weddings, so on an average, our order book is always consistent at 150 to 170 crores. But from July, the order book increases to house all the seasonality orders as well. So July, August, September, October, November, December are the biggest months for the company in terms of manufacturing and exports.
Got it. Thank you so much. That was all from my side.
Thank you, Akash.
Welcome.
Thank you. The next question comes from the line of Aman with Astute Investment Management. Please go ahead.
Yeah, thank you for the opportunity again. Sir, my first set of questions to Anmol on the lab-grown diamond business. So when we talk about we have added the largest retailer, are you talking about Walmart or you are talking about largest jewelry retailer?
Largest jewelry retailer.
Sure. And so you had talked about that most similar market to US is Australia, which we might be targeting in future. Any reasons Europe is not a target market for us?
Great question, Aman. So, it's just related to jewelry design and jewelry merchandising. The type of jewelry that Australia buys is very similar to the type of jewelry that America buys. European jewelry is a lot more finer and a lot smaller in terms of number of diamonds used, caratage of diamonds, and the look and feel of the jewelry. So, given our strong presence and our focus on US jewelry and the US jewelry industry, Australia is a natural addition.
And sir, on the capacity, what is the total gross block on the lab-grown diamond which we have?
I'll have to get back to you on that, Aman. If you don't mind, we can email you with those details.
Sure, sir. My next question to the chairman, sir, on the e-commerce contribution, which is 15% currently, sir, if you can talk about what is our target for, say, next year and next 3 years.
So we're looking for good business coming from e-commerce within our company. So what is currently 15%, we are looking for it to grow to 25% within the next 3 years.
And sir, on the base business, if you can talk about, do we see 5% kind of growth or do we see it to remain flattish over next 1 year and 3 years?
So if you really see only for the first year, 1 year, I can see coming out from a high growth point, and with inflation in America the way it is right now, we are looking to consolidate and maybe grow from 5 to 10% for the existing year. But post that, we will, definitely see 15 to 20% growth.
No, sir. So when I was talking about base business, I was saying, so if you remove the lab-grown diamond, which I think will again grow well this year, I'm talking about the remaining 500, 550 crore business, which is the traditional.
That will grow at 5 to 10%.
That you think even on this base over the next 3 years can grow at 5-10% CAGR?
Yes, on a 3-year area, it can grow on 5 to 10% without a problem.
Sure, sir. Final 2 questions. On the cash or profit side, we are generating 100 crore number, and which we will keep generating 100 crore plus. So, do you plan to increase the dividend or do consistent buybacks like last year? You have done one, but can we expect, because our business
Goldiam follows a very clear shareholder reward policy. If we have a 50% minimum dividend distribution passed by the board of directors, whether it comes of dividend or buybacks. So Goldiam will keep doing these things to ensure that shareholders are well rewarded.
So you are saying out of 100 crore every year, which will be generate, we can distribute 50 crore to the shareholders in any form.
Our policy is that on the standalone, 50% of the standalone profits must be distributed as a minimum.
Yeah, but then, sir, standalone only contributes like 50% of the company's profit, right? So,
exactly.
On a consolidated, then you are talking about 20-25% policy versus.
Not at all, because the company does on a consolidated basis does buybacks every year as well, every 2 years. But now I don't think we should make any forward-looking statements on buybacks.
Yeah, but
Right?
my point was,
The company has a sound shareholder reward policy and will follow it, and any such announcements will be made when the board approves it.
sure, sir. Final question to the team. So now we are doing, as of last year, $20 million in, say, roughly a lab-grown diamond. If you can talk about at a global level and maybe India level, who are the players who are doing $20 million kind of business in lab-grown? I'm talking about the
lab-grown jewelry.
Yes,
From
yes.
India, I guess there is nobody else.
And if you can talk about in China or any other places, who are the big players? Maybe what are
Currently,
their
it's such
scale?
a nascent and a new industry. These figures are not out yet, and there is no council or government. So I think within another next year or something, such lab-grown councils will be formed and figures will be made more easier available. The only thing I can tell you is that the American lab-grown business is close to $4 billion right now at retail level.
Yeah, that number, sir, you have shared earlier. So my point was, are we in the, say, according to your estimate, are we in the world top 5, top 10 as of now in lab-grown diamonds specifically?
No, we cannot be in the top 5 and top 10, but we are definitely in the topmost producers and probably the only one with an 100% backward integration and margin.
And do you think in the next 3-5 years we can reach top 10 or top 20?
Well, it all depends on the capex the company is able to do and the distribution the company is able to work on the said diamonds. Currently, we are selling in America. If lab-grown diamonds get more accepted in India and the company forms B2C division in India, yes, we can get into a much more stronger opportunity for us.
Sure, sir. That helps a lot. Thank you for answering all the questions.
Thank you.
Thank you.
Thank you. The next question comes from the line of Karthik Bhatt, an individual investor. Please go ahead.
Yeah, thank you for the follow-up. Do you mind sharing the order backlog currently, and has it increased YOY?
I already shared that earlier. We have a current 150 crore order and increasing. And July is the time where we get larger orders, right, for the season.
And it's increased compared to last year on year.
200 crores sitting on cash right now.
Okay, thank you so much. That's helpful. Thank you.
Thank you. Ladies and gentlemen, we have come to the end of question and answer session, and I would now like to hand over the conference to Mr. Rashesh Bhansali from Goldiam International Limited for closing comments. Thank you.
Thank you everyone for joining us on this Concall. I wish you all a great evening. I hope we have answered your queries properly. If you have any further queries, please reach out to our investor relations team. We will be delighted to respond to all your questions. Thank you all very much for joining us. Stay safe and stay healthy. Thank you.
Thank you. On behalf of Goldiam International Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you so much.